Good morning. My name's Ryan Littlestone from forexflow.live. Again, a little bit of a catch up on something I was looking at last week, Euro Sterling. This was a trade I've been short in from up top around 94s at various levels. And last week we spoke about how it's sort of pretty much stuck between two levels at the moment. Today I'm going to show the 4-hour chart of that pair. We can see that we've got this big level down here at 87, and that's really a tough nut at the moment. We've had various tests of it. It's struggled, had a little break under, just a minor break under, but again, we're just not getting through these levels here. Now on the chart, we can see where we're getting down to those lows. It's got down to sort of 86, 78, 79, 80, that sort of area. But this 87 level really is the stick in the mud, if you like. Today, in fact, we've been down to 87.10, which was the low that we matched last week as well, after we'd had a run up again towards 88. That didn't get quite as high as that, got to sort of 87, 70, 60, 70 area before we came back down again. So there's still a bit of bearish pressure on, but really we can see, really two clear lines here in this trade. If we get above this 88 level, then we do have the capacity to push on to sort of 88, 60, 65, that sort of area. I've got the two red lines marked in. That's really the key level to look at. But being short, what I'm looking for is a break below this 87 mark. Now, I let it run a bit. I was looking for a break when I was speaking last week, and it didn't happen. We pushed up above this 88 area. So now I've seen it come back down again. And last week, I did take a little bit of profit at around about 87.20 as we came back down, because I didn't want to risk this level not breaking again. And that proved to be good because, as I say, it bounced again. What I'm still looking for is this clean break of 87. I want to see a break of 87. But if we're looking like we're going to fail again, then I'm going to think about maybe tightening my trailing stops behind, bring them down a bit, because it does mean we're going to get a bit of a bounce. If we get above 88 again, then maybe I'm going to look to take some more money off the table. In the meanwhile, we've got two lines in the sand here. You can trade them in between, or you can go either way if we get a break above it. I'm looking to add on a break of 87 if we get that confirmation to add to my shorts and see where we go from there. Now, another thing I want to look at is this upbeat tone we're getting now regarding the virus. We're seeing a lot of European countries now laying out their plans for easing restrictions. And this is the focus that we need to switch to, because markets, they're picking up on it, and like we always know, they tend to run before they can walk. So there's going to be increased expectations that restrictions are going to be lifted on a wide scale, if you like. And that may not necessarily be true. It may only be small steps that governments take, but the markets might see it as a faster run towards greater restrictions being lifted and the economy is getting back to normal. One pair I've been looking at for this is the Aussie dollar against the US dollar. Because the cases have been fairly low in Australia, it's sort of bucked the trend. Obviously, it got on the big panic moves that we saw previously, the dips all the way down to sort of 54s, 55s. But we've come back up, and the cases numbers, if you look at them, are pretty low over there. Same for New Zealand. So we're seeing this positivity that we're going to start expecting or seeing this morning in some of the other majors. We're seeing that already in the Aussie dollar. So this is a trade I'm looking at. I want to get in a dip buy if I can, anywhere down towards the big fat 60 level. I've got it on the chart at the moment here. You can see it, big red line there. If we get any sort of dip down to there, I want to try and get into longs. Otherwise, it's going to be a case of seeing how far it can go. I don't really want to chase this pair. But again, if we get a dip down to maybe that old 50 fib, down around sort of 62, 60, 70, that might be somewhere worth entering. So that's a pair to watch going forward. My recommendation is to try and get a decent dip in that and go long. And as usual, I wish you well this week.